Hi, I'm Don Stanek, and I'm your Agile coach. I want to go ahead and walk each and every one of you through a basic valuation model for a brokerage. About 3 years ago, somebody approached me and said, "Hey, I want to sell you a brokerage." I'm like, "Great, how much is it?" And they're like, $3.5 million. And so at that point, I didn't give them the middle finger, but what I did is I found it as a coaching opportunity, and I asked a simple question. Please, $3.5 million sounds pretty valuable. Could you please walk me through your valuation model? At which point there were crickets. Blank face and crickets. Why? Because they didn't really understand basic valuation in their brokerage. They had quite a few agents and they had some pretty impressive sales numbers. But at the end of the day, I had no idea what their retained earnings were, and it was very difficult for me to really get to that bottom line. So what I did is I walked them through this valuation model, and I didn't end up buying the brokerage, and I did deliver maybe some bad news to this person because their brokerage wasn't worth as much as they thought it was. Surprise, surprise. Now, the other reason I wanted to put this together is a public service. I deal with a ton of people out there that are top producers and high producers, and they're looking at taking that next step. And so they're a leader, and now they want to be a broker owner. And if you don't understand the spreadsheet that we're going to present here in a little bit, it's going to be really, really difficult for you to make intelligent financial decisions based on what your hopes and your dreams are. And many times I find, and more times than I care to experience, there's a large broker owner trying to create satellite opportunities or satellite branches. And what they're doing is they're bringing managers in and they're having them buy in at a fractional ownership position into a brokerage in order to expand their larger brokerage. So if you're a manager or you hope to be a manager or you're a top producer and someone is courting you to sell you a brokerage opportunity or a fractional brokerage opportunity, I would just, maybe suggest that before you sign in the bottom line, really walk through the numbers and what's realistic in terms of you actually getting a return on your investment and how much time commitment are you going to face in order to get there. Okay, let's get started. And this by no means is the gospel. These numbers change dramatically depending on where you are in the country. This is not a financial tool. It's just an estimator so that you can get a better handle on what the heck is going on with your team or with your brokerage. So you can make a thumbnail estimation very quickly and ask yourself, am I doing okay? Am I not? Am I losing money? Am I making money? What do I have to do to change that around? And so for fun, I just dropped in some values in here. Let's just say you're paying $5,000 in rent and your utilities are $2,200. You have somebody come in and clean your office every month. That's $500. You pay a manager to do all the managerial stuff that is consistent with your brokerage. Now here's the deal. Here's where a lot of owners make a little bit of a mistake. They say, well, I'm not paying a manager and I'm not paying an assistant, right? And so I don't have that overhead. Well, you do have that overhead because if they're not doing it, somebody needs to be doing it, and that person 9 times out of 10 is going to be you. And are you accounting for the fact that there's actually drag on your monthly expenses based on that? Are you paying yourself correctly? Maybe yes, maybe no. Marketing. So I hope you're marketing your brand somehow. I don't know what that looks like for you, but you should have some kind of a marketing budget. You probably have someone who's keeping you in compliance. Again, you might be a broker owner of record, but the whole compliance piece is really important. You might have to pay somebody to do that, to keep you compliant. Like if it's you, then obviously you need to account for your time somehow. Agent learning and retention. This is a line item that a lot of brokerages just neglect, and that is, what are you doing to keep your agents satisfied? The agents that are currently with you, what are you doing? Are you providing additional continuing education classes? They might be, certified continuing education, or it might just be agent productivity. What are you doing to ensure that the agents you currently have don't leave? And of course, probably one of the most important line items in this is recruiting. What is the cost of your recruiting effort? Again, if you're the one doing the recruiting, that's fine, but you should get paid for your time. You should account for it. Settlement services, you might be supplementing settlement services with transactions you may or may not. Some brokerages pass this directly along to the client. Sometimes agents participate in this. Sometimes brokerages participate in this. You just have to ask what your situation is and account for it. Other professional services, this is your accounting, your attorney, E&O insurance, all this stuff. Here's a big line item. Are you paying for leads? Are you paying for Zillow leads or some other leads and passing these along to your agents? This is a big, huge expense in a lot of brokerages now because a lot of people have gotten very dependent on Zillow leads. And are you tracking that expense? And are you tracking what you're getting in a return on that? There's a lot of different methodologies. Some people might maintain a totally separate spreadsheet to determine what the actual monthly cost of Zillow is, because if you're capturing money on top of that and paying for this, you might want to put that net number in this spot as opposed to having it blended. Sometimes you're going to end up offering a different commission rate if you're paying for leads. You're going to handle this however you handle it. All right, these two items are kind of important. So employee bonus, monthly annualized. So if I do have a manager and I tell that manager something like, well, if you do a really good job for me, I'm going to give you a big bonus, like, whatever that is. And so let's just say it's, I don't know, $36,000. That's your stretch goal bonus. Well, what I don't want to do is account for that 36,000 in this line. I'm gonna reduce it by, I'm gonna divide it by 12, right? So I get a monthly. And so why am I trying to do this? I'm trying to do this because I'm trying to understand what my actual costs, hard costs, somewhat fixed costs are going to look like on a monthly basis. And of course, this line item is the most important of all, and that is how much are you paying yourself? When this is all said and done, what are you paying yourself? And so we can use this calculator to kind of balance, go back and forth with regards to, are you collecting something monthly out of your company? And so that's, depending on how you're structured, it might be a salary or it might be a draw against equity. And so there are a lot of broker owners that I know who really don't pay themselves very much monthly or quarterly, but at the end of the year, when they take a look at, okay, what is the total earnings of the brokerage and how much do I want to slide over into my personal account and how much do I want to keep in my brokerage account? This is this is totally a question between you and your tax person, right? Because there's definitely some advantages and disadvantages to keeping money in the business or not, or paying out bonuses near the end of the year, and maybe you don't have to incur as large of a tax liability on your company. In any event, long story short, let's just for fun say that no bonus, sorry, no bonus this year. And so what are your monthly expenses? Geez, $29K. In this model, $29,000, which means annually it's about $350,000 just to get out of bed every day. Now, like I said, we can argue about these line items all day long, but at the end of the day, you need to understand what your line items look like and what the impact is going to be on this, your fixed or mostly fixed expenses for running your brokerage. Okay, so the next thing I want to take a look at is this, and that is collected agent fees. And I'm collecting these monthly agent fees to offset my monthly expenses of running my brokerage. So brokerages run in a lot of different ways. This is my favorite method because if I can get closer to understanding how much I have to collect or how much my guaranteed cash flow is on a monthly basis, it's going to really help me kind of estimate what my owner equity is going to be at the end of the year. Much easier, and it's just give me quick detail very fast. And so for this example, let's say I charge my agents $750 a month just for the privilege of hanging out in my branch. And let's say today, let's say today I only have 15 agents, right? I don't got 20 agents. So this means the amount of money that I'm collecting monthly is actually running at a deficit. So if I take a look at my monthly deficit, it's $17,000, almost $18,000 based on my overhead, right? So if I go back up at these, take a look at these line items, I'm like, holy crap, I'm going to have to combine some of these line items. My recruiter is going to have to be my manager, is also going to have to be my owner. I need to get rid of these line items. Or what I need to do is increase my number of agents, right? Bada boom, bada bang. So here's 50 agents at $750 a month. And annually, guess what? I'm making $99,000 off that valuation. Now, here's the problem. The problem is the market that I'm in. Geez, who's going to come into work in my office and pay me $750 a month billed on their credit card every month? I don't know. What value am I providing them and enticing them and keeping them here to stay? Is it worth $750 a month to show up here? I don't know. Maybe it's worth 500. Okay, so at 500 and 50 agents with my current overhead, guess what? I got a problem on my hands. So what I'm going to do is I'm going to delete my recruiter and say that I'm doing that, right? So didn't make that much of a change. So let's say I'm going to do learning and agent retention myself also. Okay, look, it still didn't make that much of a change. I'm still running negative. Well, it just so happens I'm the broker of record. So guess, oh wait, hey, I found break even. Bada boom, bada bang. In order for me to break even in this model, like my rent's not going to change, utilities probably ain't going to change. I got to have a manager because I can't do this by myself. I have to have an assistant. I just can't run this by myself. And I got a bunch of agents who I've enticed into my brokerage because, hey, I buy Zillow leads, right? So I can't cut this stuff out. And that's fine. So if I'm down here and I'm charging, people $500 a month and I got 50 agents, that's $2,500 a month, $300,000 a year. And if I subtract that out of my overhead, which is $290, hey, look at that. I'm making 10 grand. Woo woo! Not very much. However, now we come over to the other side of the house, and that is commission revenue forecasts. Commission revenue forecast. So how do I determine where to start with that? And so a really good place for me to start is what the heck happened in my brokerage last year. And if I don't have a full year's of data, then that's going to be complicated. You're in uncharted waters. But if you're buying this brokerage from somebody else, you should have a pretty good estimation of what their annualized transactions are. And so for fun, let's say that this brokerage is doing 200 sides per year. And, I got 50 agents, right? I got 50 agents, 200 sides. So that means each of my agents on average is doing, doing 4 deals a year, 1 a quarter. That might be a minimum standard in your brokerage. My minimum standard is actually higher than that. My minimum standard is anywhere between 8 and 12. And for fun, we can take a look at my past production with the brokerage and say, all right, well, what was the average transaction side? And so for this example, I got, 500,000 in there just for easy math. So what that does is it puts me right at $100 million in transaction volume. Average commission percentage. So everyone and their brother kind of fudges this number because a lot of people say, we don't discount, we don't discount, we don't discount. Well, that's fine. So what if you have some buy-side transactions in there that are not paying a full 3%? Guess what? You either collect that money from the buyer in a buyer agreement, or you make a compromise, and a lot of times you just make the compromise, right? However, here's another thing. What if you're a listing agent and you're listing new construction, and you got a home builder, and you got 100 listings, 100 homes in a location that are being built, and the builder says, I ain't paying you 3%. What do you think, I'm crazy? I'm going to pay you 1.5, right? Or whatever that number is. Now, some of those deals you're going to double end, and so that's going to be fine. But are you going to make a compromise and sell yourself out for a point or 1.5? And the answer is maybe. It just depends if it makes good sense. So if you are a broker or a brokerage or an owner or a team leader, this number is really important. This number is super important. I have a very firm policy with all of my listings that come in my door, and that is, hey, if you're going to take less than a full commission, you need my prior authorization to be able to do it. Why? It's my brokerage, and technically all the listings are my listings, even if you're the one that procured it. So it's not about playing hardball necessarily. It's just about having people understand that things cost money and you have to account for them. All right, here's another thing that comes into play. Settlement expense as a percentage of transactions. there are some brokerages that actually pay for some of the settlements on transactions. Maybe they've got a relationship or a special relationship with a settlement company, and what we say is, hey, if you do a transaction with us, you have to use our settlement company. Now, it's maybe heavy-handed, and maybe some people might say, no, 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 it's that's a negotiated choice. We don't have to. You can't make me use your settlement services. But then maybe you throw something on the table and say, well, that's fine. Maybe you agree to pay something for that settlement charge, right? In order to entice that person to have all of your business in in a consolidated place. Okay. And I don't know what that number might be, but let's just say it's 1%. Let's just say it's, I don't know, let's say it's 0.5. Let's say it's 0.5%. Is that, well, it's 0.05. Okay, anyway. For fun, let's just say, because my spreadsheet's broken, let's say it's 1%. Okay, great. Which means, maybe on this $100 million number, I'm paying $27,500 in settlement. Maybe yes, maybe no. And then there's something else that comes up, and that maybe maybe you're part of a franchise, and this franchise takes 1% of your top end, which is you collect 2.7, and so they're collecting 1% of that, $27,000. So at the end of the day, you got a company dollar before you split it with the agents, right? So this is your gross commission that came in after the franchise fee was paid, and after you've already accounted for maybe some settlement costs. Maybe you did, maybe you don't charge them, okay? In any event, we get this company dollar split, like pre-split number. Now, this is where it gets interesting. So if you're a brokerage and your split is 95-5, you're keeping 5%, you're giving 95% to your agents of what's remaining after the franchise fee, okay? So this means you're actually only making about $136,000 off $100 million in transaction volume. Not a very big number. And so here's what's fascinating about this. You're like, well, the franchise fee is only 1%. It's only 1%. Well, that's true, but it actually represents 20% of your gross commission income. So it's not a small amount of money. 1% in the brokerage world is a lot of money because the margins are very small. And this spreadsheet is designed to show you how tight the margins are, particularly if you're not funded correctly. Okay. So I'm in a 95.5 shop, and I'm the broker, and I'm pulling in $136,000, and I'm paying out $2.58 million to my agents. Wonderful. So what the heck is the value of my brokerage? So if I go down here and start estimating what my real income is, I'm collecting about $9,600 from my agent collected fees that cover my fixed expenses, right? So this line item is coming from the left-hand side of my spreadsheet. My retained commission that I get after I pay out my agents and my franchise fee is $136,000, right? So believe it or not, like my total earnings are only $145,000, $145. Okay, now you're looking at $100 million in transaction volume, and as an owner, you only put $145,000 in your pocket. Now, here's the thing. You, like I said, might be filling some of these roles on the other side of your expense sheet. So you might be getting paid this salary, and maybe you don't have an assistant, or maybe you're taking up the role of assistant. But here's my point on this entire side of the sheet. At the end of the day, somebody has to be doing this stuff. And so if you're not paying someone else to do it, then technically you're paying yourself to do it. And if you're not paying yourself to do it, then you're going to be in this juxtaposition of how much is my brokerage earnings and how much am I making monthly or annually. So you go back and forth and back and forth and back and forth. So let's say someone shows up and says, hey, I want to buy your brokerage, or I want to sell you a brokerage. And you say, great, okay, I don't know. Well, what's it worth? I don't know, $5 million. Well, maybe it's worth 5 million, maybe it's not. But what I'll tell you is like the best managed real estate brokerages trade at a multiple of about 2.5 times earnings. Okay. So this is not a high margin multiple type company. So what I mean when I say that is let's say you own a bakery and you've got inventory, you've got trade equipment, and you own the building, and all this other stuff is going along. So when you make the purchase of that bakery, all that stuff, all that, the sign is coming along, the building is coming along, all the trade equipment's coming along, all the stuff's coming along. When you sell a brokerage, what are you really selling? Every single one of your agents could evaporate in 20 minutes. So there's a lot of risk in buying that goodwill. And so typically what happens, or what makes sense, is if you're going to buy or sell a brokerage, whoever the person is who currently owns, the current owner needs to stay in place for a period of time in order to promote the goodwill and to promote a smooth transition. And okay, so 2.5 times earnings. Well, if you're only making $145,000 in the brokerage, right? Two and a half times of that is only $360,000. But let's do something crazy. Let's say that you're the owner and you're paying yourself $10K a month. All of a sudden the value of your brokerage is 60 grand. Whoops, that's a slip and fall, right? So I hope this video has given you a little bit of enlightenment in terms of what a quick thumbnail sketch is. The goal here is I need you to fill in your numbers as they suit your business currently. And this is something you need to totally understand when it comes to expanding your business and when it comes to running a better business. The pitfall that many of the people, brokerages, get in is really simple. They're not collecting enough money to facilitate their expansion, or they're not collecting enough money to deliver on the promise. So we talk about agent learning and agent retention. So if I'm recruiting out there and I say, hey, I'm going to help you double your business, I'm going to help you do this, I'm going to help you do that. Well, heck, now I've got 50 agents and I don't have time to do any of this. I can't deliver on my promise. So I need to hire a professional development coach for my agents. Well, if that's $8,000 a month, it's $8,000 a month, right? It also means that my monthly, the amount of money I'm collecting monthly is not covering my monthly expenses, so I'm running at a deficit here. I hope that this has been somewhat enlightening to you. And at the end of the day, if you know these numbers, you're going to be really empowered to make a difference of, hey, I need to be at 75 agents, and I can't work at a 95-5 split. Maybe I can do 90-10. Maybe it's 80-20. So my ideal shop is an 80-20 shop that's maybe charging $100 a week. And then look, all of a sudden my brokerage value is $5 million. Bada boom, bada bang. Now, are you going to find people who will pay you $100 a week to work in 80-20? Maybe you are, maybe you're not. But the thing is if I'm actually paying a coach $8,000 a month to achieve the promise, which is I can help you grow your business, it might be an actually achievable number.
Okay, that's a lot of Excel for most of us. Did you see all those numbers? So what I don't want you to do is panic or freak out or not understand what I just said. So if you're struggling, and I don't care how sophisticated the person you are, I get it. When it comes to understanding the basic math around a brokerage, it can be complicated because our mind is going a mile a minute. We think, well, gosh, if I've got 100 agents, I should be doing well. Well, maybe you are and maybe you're not. If you're measuring the number of agents that you're bringing in the door and you're not measuring what the value of your company is, then you got some Swiss cheese. There's some holes in your business plan. I would love nothing better than to help you walk through this, and I'd love to see you take an assessment and a reassessment of your brokerage opportunity that you're in every quarter. Take a quick thumbnail. It's not enough to understand your bank statements. Bank statements are just money in and money out and money in and money out.
bank statements and reading your bank statements are reactive. All that stuff happened in the past, and now you figure out what happened. Something happened, and then you read about it in your statement. Something happened, you read about it in your statement. We need to get you out way out into the future so that the things that are happening are actually planned for and they're accounted for before the money starts disappearing. So get on my calendar. Like I said, I would love to help you out.